My name is Brian Watkins, and this is the third tutorial for our Accounting 231 QuickBooks module. We're going to go fishing today and create a company that assembles items into a complete fishing package for tourists. The purpose of these transactions is to teach you a little bit more about how to account for inventory and to handle the problems that arise when dealing with inventory. So let's begin by selecting the start. We're going to call after your name. I'm going to call it QuickBooks Practice number 3. The industry is retail shop or online commerce, and this project will be a sole proprietorship. So we'll continue, create the file. I'll pause and come back when we're ready to start. Okay, we'll start working. And when it comes up, we'll close the accountant screen that comes up. Center this. Okay, close that quick start. Alright, let's go do our preferences. We're going to have inventory in this exercise. We're going to have a 10% sales tax. So let's begin by going to preferences. Items in inventory. Click the box. OK. Wants to close everything. That's fine. We'll come back. Preferences. This time we'll do a sales tax. We'll say yes, we charge sales tax. And the sales tax item, we click on that. It's very simple. We call it sales tax. Okay. Hit tab and it'll go into the description automatically. Hit tab again. Enter the number 10 as your tax rate and state tax authority as the vendor. So we're going to quick add that. Alright, now we're all set up with the sales tax item, and we're going to hit OK and just accept the box. Just hit OK here. Both of those boxes are checked correctly. You'll never have to change it. Hit OK. Alright, finally, one last preference that'll make you more popular in the library, and that is to go to General and turn off the beep. There we go. Hit the home button, get our screen back, and we're going to start by putting money in the bank. You always begin by putting some money in the bank. It's the only time that you'll open a bank account. So we click on Record Deposits. Say yes, we'll create a bank account. We'll call it Bank of Laie. And now it's going to be the 1st of February. Our bank is open on Saturday. And we're going to receive from ourselves. This is a payment of capital into the business that will be from the owner. So we're an other. We're not a vendor. We're not a customer. We're not an employee. We're the owner. And as such, we're going to put it right into our owner's equity account. So we'll call it initial funding. It will be cash. It'll be in the amount of $25,000. And when we try to do this, it will say, warning, retained earnings. You're the accountants. You know that this is the correct place to put your equity. So we'll hit OK. Now we'll start. Create purchase order number 1 to Daiwa Corp for 10 Saltiga reels at a price of $300. If you look ahead, we're going to have 4 purchase orders to separate companies, and we're trying to put together 10 complete packages. Just keep that in mind. We'll go to the purchase order number 1, and now it's the 2nd, and we'll call this I think this was Daiwa Corp. And the item we're buying from them, we'll add them as a vendor. Add new item. And this is going to be a fishing reel. I think the manufacturer calls it a Saltiga reel. But we're not selling these to people. We're just going to keep it for our own records. We're selling complete packages. And the reels cost $300. So we'll put $300 there. We're not going to sell the reels as independent units. We're going to put them together with something else. So we'll leave sales price at 0 for now. And the income count will be merchandise sales. And we're going to buy 10 of those, and that will be the fishing reel purchase. Okay, so that's the 10 fishing reels from Daiwa, save and close. Done. Now we're going to do purchase order number 2. And this one is going to be to Tackle Direct. And we're going to buy, quick add them as a vendor. And this is going to be fishing rod. And it's a Penn Power Surf Rod. So I'm just going to worry about calling it a fishing rod for now. And the fishing rods cost $50 each. No sales price. We're not selling them separately. Income account, merchandise sales. There's my item. Not 50. 10. 10 of them. Okay, and this is the fishing rods. Alright, so we'll save that one. Let's go back now. Just want to make sure I got 10 of those and 10 of those. Good. Okay, so the quantity's fine. The third order goes to Moi Moi Company for 10 rolls of monofilament fishing line at $10 each. So we'll quick add our vendor, and we'll create our new item, which is fishing line. Manufacturer calls it monofilament fishing line. They're going to cost us $10 each. We need an income account, merchandise sales. That's the item. We're going to take 10 of those, and we're going to call it fishing line. Alright, now the last one. Let's go up here. Diamond Fishing Supply is going to sell us 10 tackle boxes that we've previously described, so they know what we want in them, and we're going to pay the fishing supply $100 for each one. So purchase order number 4 to Diamond Fishing Supply. Quick add. Wrong one. So we're going to quick add. It's a vendor, and we're still on the 2nd of February, and this is going to be the tackle box, and it comes with all of the goodies that we need to go fishing. $100. If this were a real business, we'd probably have a very complicated list of items that would automatically get ordered, but here we'll just call it a tackle box, and we need 10 of the tackle boxes. And it's the 2nd. It's Diamond Fishing Supply, tackle boxes 10. Save and close. Alright, now we're going to pay for our website to be set up from Gary's Web Design for $1,500. This is going to be for a year of internet hosting, and it's just going to be a regular check. So when you write the checks, remember to start by unclicking that box. And when you unclick that box, you take control of your check number. It's now going to be the 5th of February. This is Gary's Web Design, and I'm going to quick add Gary as a vendor, and this is for website design and hosting, and there's an account all ready for you. Computer and internet expenses, and how much was it again? That was $1,500. Website design and 1 year hosting. Alright, I think we've got that one. It's the 5th, Gary's Web, save and close. Done. Alright, now we're going to receive the Daiwa Corp order on the 12th. It contains additional shipping charges of $400, and it has terms on it. Now the terms mean that if you pay the bill in a certain way, you can take a discount. 2.5 is the amount of the discount. The /10 means if you pay that bill within 10 days of receiving it, you can automatically just pay them a little bit less, that 2% less. Otherwise, the company expects that you'll pay the bill within 30 days, net 30. So what we do now is we're going to receive with a bill. So we go receive inventory with a bill. It's now the 12th, so we'll change the date to the 12th. That's important now because our discount periods are going to run from the date of the bill. We're getting the items from Daiwa Corp. There's an open purchase order. So we hit yes, click the box, and now we've got our fishing reels, and you can see what our amount, cost, and quantity are. Alright, let's see if there's anything extra. There's additional shipping charges of $400. Well, we can put that additional shipping charge right here. So now that's $3,400. And let's put our terms in. Now, the 210 or the 2.5/10 is not one of the terms that's available in the pre-programmed list. So we're going to add new terms. Now, the first box is what they're called. It has nothing to do with how the program calculates. Don't make the mistake of thinking if you enter it right in the box that you're done. So 2.5/10 net 30 is what it's called, but we still have to say that the net is due in 30 days. The discount is 2.5. The discount if paid within 10 days. Alright, so there we go. The net is due. We'll just calculate a standard discount. We're not going to use the date driven, just a standard discount, and we'll go. So now it automatically comes up and it automatically pops up in our list so that next time we can get it. This is the date by which, if the bill is paid, you take the discount. And so we'll say this is the fishing reels. That's just so that if I have to go back and pick out this bill, I know what it's about. $3,400 on the 12th. Daiwa, let's double check. Daiwa, 12th, $3,400 total. We're good. So save and close. Alright, next we get a large box from Moi Moi with the 10 rolls of fishing line and a bill for $120. The extra 20 is the shipping cost. No terms are given. So we're going to receive inventory with a bill on the 13th. If no terms are given, let's just say due on receipt. And it's going to be from Moi Moi. And yes, we have a purchase order. We just click the box. It brings everything in. And we know that we're going to have to pay a little extra. It was $120. So I'll hit 120, click on recalculate. Again, the terms due on receipt. This is for fishing line. And let's double check. So, large box for Moi Moi on the 13th for $120. Moi Moi, the 13th, and $120. We're good. Alright. Now we look at Tackle Direct. They come on the 15th with a bill of $450 and a note that they were only able to ship you 9 rods. This is the first time you've seen a quantity adjustment. So what we're going to do is go in and same thing, receive inventory with a bill. Pay attention to the date, it's the 15th. And this is Tackle Direct. We take the purchase order. And now we realize we thought we were going to get 10 rods. But we're going to come down here, we're going to change the quantity now to 9. Are there any, let's see, bill is due upon receipt. And we'll say fishing rods on the bill. But we have to adjust it to 9. So it's automatically recalculated to $450, which is what the company wants. So we'll save and close. But that's going to be relevant later because we only got 9 of the 10 that we wanted. Alright, so goods arrived from Diamond Fishing with a bill reflecting $320 net $45 and an amount due of $1,050. So we go to receive inventory with a bill. It's now the 16th, and we're getting it from Diamond Fishing Supply. We'll select the purchase order, and they gave us some strange terms, so we're going to have to do the terms again. I think it was 3/20 net 45. Let's check that. 320 net 45, which means the net is due in 45 days. The discount percentage is 3%, and the discount if it's paid within 20 days. Generous policy. Fills it in. The memo is for tackle boxes, and don't forget all your costs, because it was $1,050. So we're going to put in here $1,050, recalculate, 216, $1,050, Diamond Fishing, we're good. So just remember, it's this point in the exercise where you have to be very careful to set your terms and your discount date. And I'm preparing you for the final, so take a hint. The final will require you to pay attention to that. Save and close. Okay, well, we were short one rod, so we're just going to drive into town and we're going to buy a rod at a retail store. Now, even though we could buy them for $50, we don't want to wait, so we're just going to go and buy one. So $110, we're going to pay for it with check number 2. So I'm going to go write a check. Check number 2. It's the 16th. All right. And we're going to, whoops, Roy's Fishing Supply. I forgot. So Roy's is our vendor. We're going to pay $110 for replacement fishing rod. Replacement fishing rod. Now, the account. This is going to go into inventory adjustment. So now we have to create, and I've said just create it as an other expense. We'll call it inventory adjustment. And again, this account is to work around QuickBooks. It's not an accounting account. GAAP doesn't have something in there for inventory adjustment. But this is how we follow accounting principles, by using this software. So we're going to create the adjustment account, and it's going to carry this $110 in the software to the point where we're going to actually place it in the inventory. So it's the 16th, Roy's Fishing, check number 2, 15th. Good. Now, the $110, that's what you paid for it, regardless of the fact that some of it was tax. It all goes into your inventory. So we're going to save and close, but then we're immediately going to inventory activities, and we're going to adjust the quantity and value. Okay, so quantity and total value. We're going to take any adjustment money out of inventory adjustment, and to do this right, you have to take all of it. If you ever have anything left in inventory adjustment, it's going to be wrong. That's just like undeposited funds. Now, the items that we're talking about are the fishing rods. Right now it thinks we have 9. Okay, we don't have 9. It's not worth $450. We have 10, and we have to add that $110 that we just paid, so we have $560. So the new quantity is 10. Okay, it's going to want to go and change that to 500 because it thinks they cost $50 each, but we're going to override that because we added 450 and 110. The new value is 560. To add one rod purchased at retail for 110. Okay, so now we're going to spread that over all the rods. We're not going to charge one customer more for that rod because they're all the same. So this is how you adjust quantity and total value. Alright, looks like we did it correctly. I think it's the 16th. it is the 16th. Good. Save and close. All right. Now we're going to write a check for $250 payable to Aaron Kalama for his assembling 10 fishing poles from the materials you now have in inventory. That should probably say, let me just change that here, packages, fishing packages. There we go. We're going to call them a custom fishing package, and we'll include one of the preloaded tackle boxes you ordered from Diamond Fishing Supply. Sell the whole thing for $999. So let's write him the check. He's doing just a one-off job for us, so he's not going to be an employee. Remember, employees are expensive. So we'll add, and we'll just call it a vendor. We're going to use the inventory adjustment account, pay him the $250 we owe, assembly of fishing packages. Assembly of fishing packages. Alright, let's double check. It's the 16th, it's $250, it's for assembling 10 fishing packages. Good. So we'll save and close. So now we've paid, but we immediately go into inventory activities. And obviously before we can adjust the quantity and the value, we've got to build the things. So the assembly is going to be called a complete fishing package. That's what we're going to say. It's going to quick add immediately to assembly because it knows that this isn't a part. And we're not going to worry about the cost because we have parts there. We'll call it the complete fishing package. And we're going to sell it for $999. And the income account is going to be merchandise sales. And we assume they're all going to be taxable. So this is going to involve one fishing line, one fishing reel, one fishing rod, and one tackle box. Okay, so that is our bill of materials. We have all four involved. Okay, we've set merchandise sales, we've set the sales price. So now we can come to the build, and the components needed to build. What are we going to do? We're going to build our complete fishing package. Come on, let's take it here. There we go. I don't know why it does that sometimes, but if it didn't pop everything in, just go up here and just select it again, and it'll figure out what you're trying to do. We want to build all 10 of them. We're going to call it the assembly of fishing packages. Okay, and we'll build and close. That converted all of our inventory from parts to a final complete package. And if we go to our inventory, let's go reports, inventory, valuation summary, we can see, what's today, that we have 0 on hand of all of those items. Instead, we have a complete fishing package, 10 of them. But we're not finished yet because we have money in our inventory adjustment account. So let me just show you real quick what you're trying to avoid. If you were to ever run a profit and loss, let's say all, and you were to see inventory adjustment with money in it, that is wrong. That's going to have you go back and start the whole process over again. So before you turn in any assignment, make sure that your inventory adjustment account is 0, because that would mean that you put it in the right place. And the right place for that $250, we're going to adjust the value, come from inventory adjustment, of the complete fishing package. Instead of 5,130, we're going to add 250 and we're going to have 5,380, which I think is correct. 130 plus 250 is 380. Okay, so this is to add assembly cost, and it's going to take that 250 out of the inventory adjustment, so we don't have to worry about having money there, and it's going to put it inside the inventory so that we have a good cost of goods sold number. Alright, now we're ready to start doing something. On February 20th, we have our first sale. We receive a deposit of $999 that was automatically deposited into your bank account. Well, that's the same as receiving cash. So now we have to ship a kit to John White of Seattle, Washington. But we find out that we have to pay $125 in shipping charges. Those shipping charges do not get added to your inventory because they're an expense after the sale. You forgot to figure out that people might log online and buy stuff from other states. Also, I've thrown another one at you here. Mr. White is not going to pay sales tax. So I'm just going to show you how to do a cash sale that's tax-free. We go to a sales receipt. John White, let's quick add him as our customer. Let's get the date. It's February 20th. And Mr. White is going to buy a complete fishing package. He's going to buy one of them. And what we're going to do with this one here is make it non-taxable because it's going out of state. Now, it was deposited directly into our account. That's the same as a cash payment. Let's tell him, thanks. Pleasure working with you. This is our first sale. Alright. And we're going to save and close the sale, and then we're going to write a check to FedEx. Okay, I think the check is also, let's see here, shipping charges are paid via check to FedEx, $125. People forget this a lot. Don't forget this. So we'll add FedEx as a vendor. Shipping to Washington, and the account is going to be just a straight shipping expense. Do we have one? Does not look like we have a shipping expense, so we're going to add a shipping expense. Okay, this is an expense, or we'll just say no, it's an expense. So don't get confused by that. Make sure it goes as a straight expense. Remember, this is the box that really matters. We only use the other for very unusual circumstances. The inventory account, the inventory adjustment, I use other to keep it out of the way. But keep your expenses together, and the account name, we'll just call it the shipping account. Shipping expense. It's already going to be under the expenses, so I don't need to call it an expense twice. And the amount is $125 to ship first sale to Washington. Alright, check for FedEx, $125, save and close. Okay, we're not done yet. You got to go to the bank, and we're going to deposit the cash we got. So there we go. Save and close. Okay, February 20th, we're going to write check number 5 for $300 to Gary's Web Design for an immediate change to the website so that we don't have that shipping problem again. So we should have Gary already in our setup. There's Gary's Web Design, and we're going to pay him $300 to include shipping on the internet site. Okay, so to fix internet site. Alright, 300 Gary's Web on the 20th. 300 Gary's Web, 20th. We're good to go. Alright, now there's a positive article in Honolulu Magazine. So somebody wants 5 fishing packages to outfit a group of wealthy tourists who want to fish here on the island. You're going to give them the sets on credit, $215 net 30, and you're going to pay the sales tax. $215.30. Hans Mueller. Sorry, on the 22nd. So we do credit sales by creating an invoice. The invoice, it's on the 22nd, is to Hans Mueller. He wants We'll quick add him as customer. Wants 5 complete fishing packages. And we're going to give him terms because we want him to pay the bill fast. I don't see the terms here, so we're going to add new terms. 215 net 30, I believe is what it was. 215 net 30. That is due in 30 days. Discount percentage is 2 if paid within 15 days. So we're extending a discount to Mr. Mueller to get him to pay us. Thank you for your business. That's a big sale. $499.50 of the tax. All right, so credit sale of 5 packages. 22 credit. Everything looks good. Save and close. His terms, we'll keep them the same. All right, now we go on to March 1st. And on March 1st, they're going to bring us a check for this amount. And he says he'll likely have need of about 20 kits in the upcoming 2 months. Don't do anything about that now, okay? That's not a transaction. You'll see something like that in the final, where somebody says something, but they haven't done it yet. That happens a lot in business, and I, in my legal career, had a lot of people that thought they had made a deal when they hadn't made a deal. So he's just telling you that he likes your stuff. So on March 1st, he's going to pay 5384. Let's take that amount and copy it so we don't need to go back and forth. So Mueller, March 1st, is going to pay us. So we receive payments. Well, we only have Mr. Mueller. So now everything is going to come up. It's now March 1st. Set that date. That is crucial. So with March 1st up there, we're going to say he's going to give us a check, and his check is going to be, I don't think we give a memo line or a check number, so we'll click the box here, and let's go and say this customer has discounts available because they've paid us within the terms we gave. So to apply discounts, click discount and credits. So click the box. It says suggested discount $109.89. The amount $109.89 came in just straight. All I have to do is set the account. Sales discounts. You don't have to make it up. It's right there. This is on the final. Hit done. And now you can see that the amount that they paid you matches what they owed. So save and close. And don't forget to go to the bank. So they paid it. We take it to the bank, everything looks good, and we deposit it. Alright, now pay all outstanding bills, including transferring the sales tax collected to the state tax authority. Alright, so let's look at our bills now. Alright, it is now the 1st of March. Okay. So it looks like we have 3 bills here. We could pay them all at once. We've missed the discount date on all 3 of those. So I'm just going to pay those 3. We'll assign check numbers. And we'll just say, what check are we on? We used 5 for Gary's Web, so this would be 6, 7, and 8. Okay, let's pay another bill. Now we're going to pay a bill for the fishing packages, and look at that. We're going to get a discount of $31.50. Okay, so go in and assign, set the discount account. Because this is a discount that we received from a supplier, that means that our inventory cost a little bit more than we thought it should cost, or cost a little bit less rather. So our discount is going to go into inventory adjustment. Okay, remember this isn't a discount we're receiving. This is a discount on money we're paying out. And so when we pay for our inventory, we have to keep the inventory in our books at the price we pay for it. And we just found out that we can pay $31.50 less. So we'll put it in the inventory adjustment, pay the bill, 5, 6, 7, I think we're on number 8. Whoops. Hey, look at that. I've never seen that message. That's good. We're on check 9. Done. Okay. Now what we have to do is we have to go up into our inventory activities and get rid of that. We're going to adjust our value. So if we look in our inventory adjustment account, and I just forgot how much that was. So what we're going to do is look at the report for just a straight income statement. Okay, and it looks like $31.50. So write that down. We've got to get rid of that, because if you ever turn something in that has an inventory adjustment, that's incorrect. So we'll close that, and we'll get our fishing packages, because it's all been assembled now. We'll set this to total value, and instead of $2,152, we're going to take $31.50, subtract from that. Now our inventory is worth $2120.50, because we took $31.50 out of the value. And this is to adjust inventory value because of discount that we received. Okay, so now when we sell the next few, our cost of goods sold will be correct. So I'll save and close. Done. Now if I were to go back into that profit and loss, you'll see that there's no inventory adjustment, which is as it should be. One last item to do. Now the income that you saw was final, but here's another issue to watch for in your balance sheet. So I'm going to put all on my balance sheet. When you get sales tax, you're holding money for the government. So if you finish your transactions and you're still holding tax, that's just as wrong as having undeposited funds or leaving money in your inventory adjustment account. Paying taxes is easy, but there's a trick. Let's see, manage sales tax. Okay, so we'll just come down here and say pay sales tax. This is probably the #1 reason people have to go and retake their final exam. Okay, because the date now is March 1st, and you change your check date to March 1st, but you also have to show sales tax through March 1st. You have to change both of those dates. And once you change them, you can click the box, and there's that whole $499. Hit OK, and you can look at your checks if you want to and see that it automatically wrote that check. Alright, having fixed that up, there's only one thing left to do, and that's to save your statements. Now, don't just take the statement as it comes out. This says February 1 through 22nd, but we want all of it. We can either go like that, or we can make sure our date, let's close it and do it again, because this is important. If we bring up just the default, see where it says 1 to 22nd, we can change this second date to March 1st and hit refresh. Okay, so now we make sure we have everything, and the net income for this exercise is $731.11. So we're going to save that as a PDF, and I'm going to call it QuickBooks Practice number 3 income statement, which I probably used, but I'm going to replace. Done. Now we do the balance sheet, which likewise needs to be either you set this to all, or you just set your date over here to March 1st and hit refresh. So there's our 731.11. We have our equity intact. We haven't used any of it. The inventory asset is worth $2,120.50. That's the tricky part of this, because if you didn't take and account for that discount, you're not going to have the right inventory asset. So, you know, you finish this correctly, you'll just shoot right through the final. It'll be easy. So we'll save the balance sheet. QuickBooks, practice, number 3, balance sheet, done. And then finally, I asked for some help. A few of you are doing it. I appreciate it. If you go and do your accounting journal, say OK, and you, instead of creating a PDF, you print it to a PDF writer. You can download these. Then you can change the orientation to landscape, which helps so much. I'll think happy thoughts about you if I open up your forms and they are in landscape mode on the accounting journal. So QuickBooks, practice, number 3. Well, we don't say, we'll just say journal. All right, now your journal numbers may be different than my journal numbers, because you may have gone back and fixed something, or have, let's make sure we show everything, or you may have some other reason where you went back and covered a check. So I don't grade on these two numbers. I just make sure that you've done all of your transactions. The numbers that you need to check are found on your income sheet and balance sheet, or your income statement and balance sheet. All right, so you're finished. Make sure that you practice a couple times, get it over with, and we'll see you on practice number 4.